Inflation has cooled off in September. The consumer price index has fallen to its lowest level in 13 months to come in at 4.3%. Food prices have eased as pulses prices have dropped to 14% from earlier 22% that was recorded in the previous month. As always, Latha Venkatesh is joining us to give us the big picture. Latha.
Yes, actually, this is the second month in a row that the inflation number is coming lower than expected. In August as well, the expectation was it would be about 5.15. We ended up with a number of 5.05. Now the expectation was 4.5 plus, with some people even going to 4.55. The actual number is 4.31. So we are undershooting expectations, which means that the Reserve Bank's March 31st number of 5% could also be undershot. And that opens up space for another rate cut, according to the experts. Among the other internals that are very positive, food inflation has come in at 3.88 compared to 5.91 in the previous month, which itself was a big fall from the 8% plus in the month of July. So we have seen a steady crash in the food inflation prices. The chief contributors are vegetable inflation, which contracted by 7.2% compared to a rise of a measly 1% in August itself. And in the previous months, this inflation had been very high. Pulses inflation has fallen to 14% from 22% in the month before, and likewise larger numbers in previous months. Others have come largely in line with expectations. The one probably dissonance comes from core inflation, which is really services. If you take out food and fuel, what you're left with is recreation, health, education, and personal services. That has come in at 4.88 compared to 4.72. Now, that is the sustained inflation. Services like food and health, health and education, which you can't import, which is India's inherent inflation, that is a bit stubborn and not falling below that 4.7, 4.8 mark. That is the only cause of worry. Otherwise, the overall inflation is falling pretty sharply, with both food and industrial goods nosediving, or at least on a declining path. Experts are are almost sure that there should be a rate cut in December as well. Bond yields are expected to perhaps fall by about 4 or 5 basis points on Friday, and the stock markets also will take note of that and probably give some thumbs up to the banking stocks.